Right, we just first remind ourselves of the technical picture. The technical picture shows that on that 4-hour chart, right, we have concluded a wave 3, a high degree wave 3. This high degree wave 3 is about 61.8% inside of the ending diagonal on the daily and weekly charts, daily and weekly time frames. So remember these dotted white lines at the bottom and at the top of that chart are really these dotted white lines that you find here on the daily chart. We are now about 61.8% into that ending diagonal. Over here it's recording at 159.97. On that 15-minute chart today, it is recording at 160, so it is really at 50. At more that point here is 61.8. So we are bullish. We expect a bounce either at 61.8%, 50% if it does show. So the bounce is coming in actually at 61.8%. We just want to relate it to what could happen afterwards. A bounce here could do another head at 164, could break higher, all right, and 160 is right there. That's where we are here today. We are of course 159.84. So what we're seeing on that chart, this is the weekly chart at that red marker or red line, it's 160. So we're very close to that neckline. The current bounce that we are going to be buying into on the 15-minute chart. Okay, if it is a valid breakout, we'll test 163. We'll test that neckline. So we would want to look at this and keep it in mind and focus so that we actually apply the correct entry. Okay, so we would use the 15-minute chart to apply the correct entry. We just have to, I think it's more best to take that recess first so that we don't get cut off. All right, making the entry. Okay, so we're back now on that first. Let's redo the analysis very quickly. Remember, we have already concluded a wave 3. This comes in at the neckline. There's going to be a correction. Would expect the correction to bounce at that lower neckline on top of the level 5 where the cycle actually breaks out, or at 158, or 50% between the two necklines. 50% comes in at that 61.8% where we are right now. Alright, so even if we're going to test that lower neckline where the cycle actually breaks out of, this is that lower neckline we're looking at, 156.9, and above it just 158.44. Over here we're seeing that 158.07, about very close to that cycle top on the daily chart, 158.44, and then 156 is at the cycle top itself. So it would mean that even if we are going to test this cycle top, which is showing here at this point 158, in wave 4A we would actually just bounce at 50% between the two necklines, or 61.8% between the two necklines, do a 4B, and then still do another 4C. That 4C can get to retest the cycle top before the whole correction is over, and we recontest the upper boundary of that ending diagonal. So we focused on this area, 4A. That's why we really believe there's going to be a bounce right now at that 4A. We want to segregate the current decline from level 3 here all the way down to level 4A. Pick an internal level 1 entry, is showing here. You can all see this on the 4-hour chart. It's probably where the bounce is, and it would mean that whatever we're going to be buying into this, we have a stop below that level 1. So this is still moving lower. It's doing now 159.8, but we can see that it has the potential to fall all the way to 158 and maybe even lower levels, 157.5, bounce at the top of that level 1. All right, it would by then be bouncing at the neckline, but if we still continue to remain, if we're still getting negative momentum, then you can expect this kind of move. Once we get a positive momentum clock, we really expect a bounce again between 61.8% between the two necklines, around 159.5, 159.7. These kind of levels should see a bounce. Will take you back to retest the old neckline. This is 4A, and then that would be a 4B before you get to see another 4C. So we're now buying into 4A. That's what we're doing here today. We're looking at that motive correction that actually probably this is updated until actually today's price action, and we believe that 4A is finished on this 1 hour chart. This is again an updated chart inclusive of early Asian price action today. You can see that we're doing a wedge. We're just waiting for breakout of that wedge. That wedge actually already did a 3 swing move. A wave A would be a 3 swing move. So it did a 1 and 2, did an internal 1, 2, did a 3 and a 4, rejected that internal. So that depicts here, and there is even an internal 1, 2, 3, 4, and a 5. This is higher degree 5, or an internal degree 5 into that 3. It is the end of the move. What we're seeing is 4B. This is 4B here showing in blue, in green, I'm sorry. That 4B is a 3 swing move. It's an A and a B, and the last leg into C is going to be a 5 wave structure. The market has done an A, the market has done a B. We expect now, we still don't have the confirmation, the positive momentum confirmation that the market will break out into C. But we're very close to it, we think, because we're beginning to see positive momentum on the 15-minute charts. Even though it's not showing on the 1 hour, this is a 1 hour chart, but usually a wave B that we are going to be buying into just needs contained momentum above oversold on the 1 hour chart, and the wave B itself will reject at overbought levels or at 0 line on momentum on the 1 hour chart. So any bounce at oversold level on a 1 hour chart is a valid entry if you're having positive momentum on the 5 and 15-minute charts into that wave B. Okay, so this is where we are on the 15-minute chart right a while back. Remember that 3 here is the end of wave 4A. The market did leg A, did an A and a B and an A, B, C into leg B. Again, the market did a leg A, it did an A and a B and a 1, 2, right 3 into leg B. This could be 1, 2, 3. If it does average wave 5, market is a buy at all these levels. Alright, once we begin to get positive momentum on the 15 minutes, we know we would consider we're going to be getting a degree 1 on the 15-minute chart. Alright, we did that degree 1 earlier here in wave A. That's just what's been having, what's going on. And we really have the same plot also for sterling yen. So we have some positive momentum here. If this is a wave 1 or wave A, the correction is a 2 over B. Again, we're having an A, B, and then there's a 1, 2, 1, 2, 3, 4, 5. You can see the internals all fit. It may now be that at that point that was a breakout. It may be we still get another leg down, 159.6 our buys, 159.7 and 0.8 our buys, all the way down to the bottom of that actually level 3 at 159 are all buys. You stop it just below the bottom. So this is an AB, and A can drop a bit lower than, so AB here in yellow could drop a bit lower than that level A in reality, and it could still be a valid structure because this is an ABC formation. So we don't really need to have the stop just below the market bottom. We go live then now and we investigate, but we know we should be doing a buy, and that even if the momentum is like this, negative on the 1 hour and negative on the 30 minutes, it is a buy if momentum is positive on the 15 minutes and 5. You get to do that with C into 4B.